Welcome, techies, traders, and haters alike. We are the Double Slit Stock Experiment. We are back here for episode 3 of a very important series of building the basics. Everything comes from a foundation. We believe in it wholeheartedly. The things that we have learned to help us trade through these crazy markets are in this series. At a very beginning start with RSI in episode 1. Episode 2 follows up with the EMA and the MA moving averages themselves. And today, episode 3 is going to be all about the MACD. Aaron, tell us what the MACD stands for.
The MACD stands for Moving Average Convergence Divergence.
That is a mouthful.
Yeah,
you did say it right. You did say it right. You probably never have to say it again. That's why they call it the MACD. Why don't you take us and show us what the MACD looks like?
So if we look at the chart, I think that's the wrong MACD.
I think so.
Yeah. Here we go.
There we go.
So what you're seeing on the screen is Webull. And why don't you tell us a little bit about Webull, Pat?
All right, so what we've got is Webull. This is our favorite charting software app that you can install. It wasn't very long ago, or just a couple years ago, you would be charged a lot of money just for every trade, and that was something you had to think about. Today, it's very different. Webull offers free trading, and if you are interested in getting started with Webull, we do have a link in the description down below. So you can take advantage of that. You get a couple free stocks. We get a little kickback too, and it's a wonderful thing. We invite you to take a look at that. But in the center here, you're going to see some indicators that we've already brought up. If you've seen the first episode, RSI, we've already got that on the very, very bottom. So we're going to use that as a tag along because we do use this in tandem with the MACD, as well as the MA in the second episode. But in this chart, you can also see all three of those. Actually, the MA is also running up top there. So in the center indicator there is going to be our MACD. Aaron, take us through it. We've got a couple lines moving around there. What is all this stuff?
If you're using Webull and you'd like to follow along at home, the first thing that's helpful is learning how to turn these indicators on. So if you look up here at the top corner of the screen, you'll notice that we have this indicator or this button right here. And I'll go ahead and highlight that as well. You're going to press that button up there, and that's going to bring up the indicators along this upper bar. And as soon as you have the indicators up there, all you have to do in this example is click on the MACD button, which I just highlighted right here. That will allow you to see this indicator underneath the stock price. You can do the same thing for the moving average, which gives you the blue line going in through the candles of the stock price, or you can click on the blue RSI right there next to the MACD, and that'll give you the RSI indicator at the bottom. But for the rest of this, I'm just going to break down what the MACD is and where you're going to see it. So you can see the MACD and the RSI are normally going to be represented underneath your stock price. The MACD is made of a few different components. You've got the MACD line, and the MACD line is, as long as it's above your signal line, our MACD line is in yellow by default and the signal line's blue, but you can always change those to whatever color works best for you. As long as the MACD line is above the signal line, it's considered in an upward momentum period. If it falls below the signal line, it's considered in a downward momentum period. And then you have the center that the lines move around, which is called your positive momentum line. If the MACD line is above the positive momentum line, the overarching trend of the stock is in an upward momentum. If the MACD line is below the center positive momentum line, then the overall trend of the stock is in a negative momentum. The reason that's important is you're going to see fluctuations in a stock price, and you can see fluctuations in the MACD, but the overarching trend from the beginning of this chart to about 2/3 of the way down is constantly moving in an overall downward trend. It doesn't change until you see the MACD cross back above that positive momentum line that it starts to rise back up. When it crosses that center line is generally when you're going to determine, is it in a true reversal or is it just in a dip if it's just the MACD separating from the signal.
Right. And you can actually use the RSI in conjunction with the MACD there. And you can tell when things are, it's just, again, just indicators. Some things are moving faster in the RSI. But essentially, these things are moving together. That, again, just indicators, no guarantees that it's a good time to get in or get out. Moving on to the positive momentum line, take us through it.
The positive momentum line is what gives you an indicator of the overall trend of a stock. If the MACD is currently above that center positive momentum line, then the overall trend of the stock is considered an upward momentum. If the MACD falls below the positive momentum line, then the overall momentum of the stock is considered negative. So if it's been in an upward trend and then it crosses down below the positive momentum line, that might be an indicator that you're about to see a reversal. So there's two more indicators that are tagged off that center line, and you'll notice these green bars and these red bars anchored to either side of that positive momentum line. What those are is the momentum indicators. That's giving you a gauge of how hard is it pushing upwards or downwards. The larger the bars, the stronger the push in either a positive or a negative momentum. So the green, again, is going to be your upward momentum pushes, and then your red bars are going to be your negative momentum pushes. So you can kind of get an idea of how quickly it's moving in one direction or another based on how big the bars are getting.
And of course, you do have the signal line when it crosses over the MACD line. Those are also indicators as well. I think you've got something drawn up for us on that one. Those are also great indicators.
Beyond when it crosses the actual center positive momentum line, anytime the MACD is above the signal line, and you can see each time it crosses, I've highlighted in yellow going along the chart, as it crosses from the top to the bottom, you immediately are seeing the downward push in the red. And then as soon as it goes back above the signal line, you see the green right here. And you can also see that flow in the stock price up at the top. Even though you're seeing upward momentum throughout part of this climb here, the overall momentum of the stock price was still going down. And again, we saw that upward trend. Maybe you thought it was recovering, but if you're watching the MACD and it bounces off that center positive momentum line and starts to fall back down, well, then it hasn't reversed and the trend is still continuing overall in a downward direction. So there might be a better buying opportunity later when it finally starts moving back above that positive momentum line and breaks through that resistance. Okay, one last thing to look at is how these things line up. So if I come down here to the RSI and I find a spot where it started to rise, and I just make a vertical line all the way up the chart, you'll notice that the RSI starts to rise first. Then the stock price follows. So the RSI started while it was still dropping. Stock price follows after it. So if we come over here to the peak of that upward swing, you can see that as this is coming up, the stock price follows. The moving average is slightly behind the RSI. And then the MACD is even further behind the moving average. So you can see it starts to really widen up and gets its bigger push right in here, which is as it's starting to peak and fall back down.
And another thing to point out is the RSI in this particular chart does not go over the overbought, which is typically 70, which makes sense. I guess the stock has not been performing well. I guess if you were to zoom out, you would consider this as a consolidating period for the stock. However, that RSI just never points too high or too low on the overbought or oversold part. So you can see it's kind of hard, again, as an indicator alone as the RSI. If you used that threshold of 30 and 70 to tell you when to buy and sell, you wouldn't be buying or selling the security in this time frame.
Well, that's if you use that as your only indicator.
Right.
I would say that to me, the biggest advantage that the MACD does for me personally when I'm trading is I look at the RSI to see, is a stock in a position to where it's a good value? Is it on sale? Do I get a deal? I'm going to look at the moving average to try to get an overall trend of which direction it's going. And then I'm going to check the MACD to see if the overall trend is currently in an upward or a downward position. If it's currently in a downward position on the MACD, even if my other two criteria match, I'm still going to wait because it's not showing me that it's recovering yet, unless I
Right.
just have an abundance of confidence that some catalyst is going to happen, like an SEC announcement or a big event, something like that, where I know that's coming. I'm confident that's going to affect the stock price. That's not going to be reflected in these indicators. None of these indicators on your chart are telling you what happens in the future. It's all simply an aggregation of what's happened in the past to give you an idea of what the trends are doing and how it's performing overall compared to past performance. It will never factor in some future event. Like, for example, Toyota just announced their new electric car. Their stock, their MACD, their RSI, their moving average are not going to reflect a possible jump in the price due to that announcement. It's just not going to be there. You might see it later, what happened after, but well, you will see what happened after, but you're not going to be able to predict that jump in price off of these indicators. They're simply to help you decide if your convictions match up with the trend. Is that the time to try to get in?
Or when to get out for that matter. So it is an important indicator, but anything, like he said, you can't use it to tell you what's going to happen in the future. You're going to use these very quickly. These aren't something you're just going to sit there and study. You can look at your past trades that you made and just kind of make fun of yourself. Let's say you've made some trades in the past and you're like, oh man, I wonder if I did well or bad, based on your outcome. And you can go kind of test your results back before you knew what these things were, some of these indicators, because I knew I was embarrassed on some of them when I did. But of course, the more knowledge you have, the more power you have, and you can swing the percentages in your favor for success with these types of indicators. But do keep in mind, they are only that. And there's no guarantee. And that's always the case. Any type of information, like Aaron was saying, can swing a stock from one place to the other. And you will notice that in that case, these indicators follow the news. They don't indicate that it's coming. So in closing, please click that like and that subscribe button. It does help us out, especially in the very, very beginning here or so. But another way to support us is to head on over to the Patreon. We do have a Patreon page where we have exclusive footage. We have outtakes. It's going to be a lot of fun. So please do check the links in the description. We do have the other two videos in this series to help you with the RSI and the moving averages. So hopefully this MACD kind of puts it into some perspective, into some real world trading. And we really appreciate you coming by.